investment series. My name is Sam Stallone. I'm a principal here at Insight, and I'm joined today by Dr. Steve Garth, a member of our investment committee. Steve, I'd like to chat about the comparison between the Australian share market and the US share market. It looks like in the last 12 months the Australian share market hasn't fared as well as the US.
That's right, Sam. When we look over all of 2020, still good returns, but the US market has definitely done better. In this slide, I'm showing not only the performance of the Australian market and the US market, but also the performance of a group of stocks known as the FANGs, an acronym which I'm sure our viewers have heard of, but if you haven't, it stands for Facebook, Apple, Amazon, Netflix, Google. In fact, there are other things in there too, such as Microsoft and Tesla as well. Basically, it's like a tech index, and you can see, probably no surprise, that over 2020 that part of the market had a phenomenal return of 100%, and that is a very large part of the US market, Sam, and that's really why the US market has done better than the Australian market over 2020. So Sam, let's look at the Australian market, and I don't think it'll be a surprise to anyone that the two biggest sectors or the two biggest industries in the Australian market are financials, make up nearly 30%, and then materials, and they're the mining companies like BHP and Rio. Together, they make up 50% of the Australian market, so they're very dominant. And probably not a surprise to anyone that over 2020, which is where COVID really hit in February, and it's taken most of the year to sort of recover from that, financials were hit quite hard. But if I turn to the US market, Sam, the biggest sectors there are information technology. Now that's Apple and Microsoft, and another big sector is communication services. You see they're about 11%. They are Google, Facebook, Netflix, for example. Financials are a smaller part of the US market. They're only 11%. So just as in Australia, financials didn't do so well in the US, but of course the tech stocks, as we saw with those FANGs, did really well. So information technology and communication services did exceptionally well. And that really is the difference between the Australian market. It's very concentrated into financials and mining. The US market is more diverse. It's got different industries that you don't get exposure to just by being an investor in Australia.
So really, investors should continue to focus on having an exposure not only to Australian shares, but also to overseas shares where they can access these other sectors that otherwise aren't really available here in Australia.
That's absolutely right, Sam. That is the greatest benefit of diversifying into both Australian and global shares, is the fact that you're diversifying across different industries. And so you're going to get different outcomes which together make a much better outcome for you as an investor than just being, for instance, 100% in Australian shares.
Thank you, Steve, for your insights there. Keep in mind, Insight Private Wealth is a professional financial advice firm. We're not owned or controlled by financial institutions. We're simply here to provide clients with professional and objective advice with regards to their investments and retirement lifestyle planning. So if we can be of assistance to you at some point, please don't hesitate to reach out to us. We'd be glad to help.